Hi friends, this is Praveen. Hope you are doing good. This video is related to Ind AS 116 and IFRS 16 which deals with leases. I tried to compile all the major points in this short video like definition of lease, major changes in previous AS and new concept called short term and low value leases. This video will mostly helpful for the people who are aware of leases or having basic knowledge about leases and who wants to know about changes made in leases. And for the people who are appearing for the interviews, as the interviewer focus more on latest Ind AS and IFRS, of which this Ind AS plays a crucial role too. So let's start our video. So this is all about Ind AS 116 and IFRS 16. The previous AS governing the leases is AS 19 and later on it changed to Ind AS 17 which got eliminated, and now the amended Ind AS is Ind AS 116 and IFRS 16. Fine. First we discuss about the definition of lease. What exactly the lease is? The lease is a contract or a part of contract which conveys right to use an asset to the lessee in exchange of a consideration for a specific period of time. Fine. So what the highlighted point is, there should be a contract and there is a right to use an asset to the lessee for a consideration in a certain period of time. So what Ind AS 116 mainly focus is, irrespective of kind of lease, whether it is a operating or whether it is a finance lease, as there is a right to use an asset to the lessee, so lessee should charge in his books of accounts the right of use. So in order to see, the Ind AS 116 and IFRS 16 focuses more on lessee point of view than lessor, and it brought a major change in lessee books of accounts, and the lessor treatment is same like Ind AS, sorry, is the same like previous AS. So the main focus is on lessee point of view. So what exactly the lessee should do? The lessee is nothing but a user of asset and lessor is nothing but the owner of asset. So lessee should charge in his books of accounts an asset as it is a right to use an asset. Fine. What AS tells, like what before the amendment comes, the treatment in the lessee books of accounts is there are two types of leases, operating and finance lease. And the operating lease, he should charge to P&L the lease expenses, whereas in finance lease he should create an asset and he can claim the depreciation and he can claim the interest expenses, etc. So this is all about the previous AS. So now the operating lease as well as finance lease is irrelevant whether in the treatment of books of accounts if lessee. So what they made is, the lessee should charge the right of use and the lease liability irrespective of type of lease, and he can claim the depreciation and he can claim the interest expenses. So by this what happens, irrespective of lease, in profit and loss accounts interest expense will be debited and depreciation will be debited, and in the cash flows and the principal and interest portion what he is paying can be classified under financing activity, and in the balance sheet the right of use should be under asset side and the lease liability should be on liability side. Fine. So in order to extend more, so what exactly the change is, first of all there is no distinction between finance lease and operating lease. Irrespective of whatever the type of lease, the entries are as follows. Please keep in mind only this is a lessee point of view. Lessor point of view there is no change at all. So what exactly the lessee should do? First of all, he initially recognized the asset, right of asset account data to lease liability. So by this it will comes in asset side and this is a liability, and after this at the year end he can claim the depreciation on right of asset as this is an asset. So depreciation account data to right of asset, and at the same time this lease liability will be treated as a loan and on which the interest portion he can claim. So interest account data to lease liability, and the whole amount, the principal as well as interest, he is paying to lessor in the form of cash or bank. So he can write the entry called lease liability account data to cash account. So in summarize to say, first of all he should create an asset and liability, and in this asset he can claim the depreciation and in this liability he can claim the interest, and the rest principal and as well as interest he is paying to lessor. So this is how the new treatment of Ind AS looks like. So in short to say, in the balance sheet there is asset and there should be a liability. Asset is a right to use an asset and liability is a lease liability. And in profit and loss account, as we said, there is no concept of operating lease. All he should do is he can claim a depreciation and he can claim a lease liability interest. Fine. Apart from these, as we say, new concept called short term as well as low value leases. So there is an exception for a lessee, like in the sense for lessee there is no point of creation of right of use and these lease liability, etc. There is an exception for that. So for these two cases, that is for short term as well as low value items leases, there is no need to create this right of use and lease liability. He can directly charge to P&L, like same as operating lease in previous AS. So what exactly the short term leases? The short term leases are the leases which having a period of lease less than or equal to 12 months. That's it. So low value leases is nothing but it is a material item, like the low value will change from what I can say organization to organization. So for them 5,000 will be a low value, etc. So what the main criteria we should see is the short term leases should be classified by class of asset. Like we should see in a lease how many assets are falling under less than 12 months and how many assets are falling under 12 months. So those who are falling less than 12 months, they should classify under short term. Those who are falling under more than 12 months, they should be treated as a normal lease treatment. And the low value items should be recognized on lease by lease basis. We should see the lease by lease basis. Fine. As we say, when this exemption is applied, we should recognize these expenses like lease liability expenses over a period of time of leases in a P&L. That's it, friends. As we said, the main focus on definition of lease is discussed and the major changes in previous AS, that is in a lessee point of view. So there is a changes brought and there is a concept called short term as well as low value leases. That's it. Thanks for watching, friends. Please do share your feedback and please like, share and comment.